What are the eligibility conditions to take the input tax credit? First one, he should be a registered person. But if we are receiving the goods in installment, once we get all the installments, then only we can claim the installment. These services, as a business purpose, we did these things, then input service tax is available. Once the goods received by the recipient, he will again issue a document regarding the how much goods he received, what is the actual value of the goods. Hello my dear students, I am Rajay sir, faculty, Department of Commerce and Management, Vidhyaashram, First State College, MYSURU, a Temple of Excellence. My dear students, in today's session, we are going to discuss on indirect tax 2 revision on input tax credit and returns under GST. Now, let's go to the meaning. Let's understand the meaning on what is the input tax credit. See, for example, if we want to produce any products, we have to purchase the raw materials or any other capital goods. Let's assume we have purchased 10,000 rupees worth of raw materials. On this, while purchasing raw materials, or this is called as input. Input means to produce any products, we need input, we need raw materials, we need any other capital goods. On this, I paid 10% tax. While purchasing any products, we have to pay the tax to the extent of 10%. So let's assume the tax, input tax is 1,000 rupees. Input tax is 1,000 rupees. Again, I will start to value added, or I will produce the product by using the raw materials, or I will transfer this raw materials to finished products, and I will add the value to the extent of 10,000. I will add the value to the extent of 10,000. The total cost of the product is 10,000 is the raw materials. Again, production cost plus labor cost including every expenses, it is 10,000. Total value of the product is 20,000. Total cost of the product is finished product is 20,000. So here, while selling the product, or this is called as output. So this is input. For input, I added the value to the extent of 10,000, or the value of the output is 20,000. Again, while selling this product, I have to pay the tax 10%. I have to pay the tax 10%. It means 20,000 into 10% equals to 2,000. Are understanding? See, this is input. On input, we added the value to the extent of 10,000. Total value of the product is 20,000. So the output value is 20,000. Again, on output, we have to pay the tax 10%. While selling the product, we have to pay the tax. So now, if we calculate 10% tax, it is 2,000 rupees. It is 2,000 rupees. Again, now already while purchasing the input, we have paid the tax 1,000 rupees. The government or the tax authority will give credit. So to reduce the tax to the extent of 1,000, because already we have paid the tax on input. Okay, so on output, how much we have to pay the tax? 2,000 rupees we have to pay. So we can reduce, or we can claim the input tax credit. What is this? Input is 10,000. Tax is 10%. That means 1,000 is the input tax. So we should get the tax input tax credit 1,000 rupees. Deduct is 1,000 rupees. Remaining tax payable 1,000. So while paying the output tax, we can claim, or we can deduct the input tax, whatever tax we have paid while purchasing the input. That tax has to be deducted. Remaining amount has to be paid as a. This mechanism is called as input tax credit. So input tax means this input tax, when we get the credit, or when we get the when we can reduce the input tax, that is called as input tax credit. This is the credit available, or the provided by the tax authority. So input tax means tax paid on inward supply. So this is inward supply. 10,000 is inward supply. It may be raw materials, any other goods and service, etc. of inputs, capital goods and services. The tax paid on input are available for set off against the tax payable on output. Tax payable on input is available to set off while paying the tax payable on output. So what are the amount we payable in output? 2,000 rupees is the output tax. So we can set off the input tax from the output tax. Remaining amount should be payable as the tax to the tax authority. Next one, eligibility. And condition for taking the input tax credit. What are the eligibility condition to take the input tax credit? First one, he should be a registered person. So if I get registered only, I can get the input tax credit. Unregistered person cannot get the input tax credit. Next one, he should be in possession of tax invoice. So he should be having all the documents. So on what amount? So we can get the tax. For example, what are the bills? I should produce all bills, documents, how much I produce, how much raw materials I purchase, all documents has to be produced to the tax authority. He should receive the goods or service both. First we have to receive full goods. For example, so if we are receiving goods in installment system, for example, today I receive 10,000 worth of raw materials, tomorrow I receive 10,000 worth of raw materials, day after tomorrow I receive again 10,000 worth of raw materials. Ultimately I have received 30,000 worth of raw materials. So till I receive 30,000 worth of raw materials, I cannot claim the input tax credit. Once I receive all the goods, then only I can claim the input tax credit. Next point, the supplier should have actually paid the tax charge in respect of the supply of the government. So already we have to pay the tax. Already I have purchased the input to the extent of 30,000. For this amount we have to pay the tax. First we have to pay the tax to the government. After that I can deduct the tax from the output tax. Next point, he should have furnished the returns under section 39. Returns means we have to provide at the end of the month or at the end of the year, we have to provide all the details. What is our transaction, what is our input, what is our output, how much we are producing, what is our expenses. All the details has to be produced to the government. Next one, when goods are received in installment, ITC can be claimed only when the last installment is received. I already explained you. So once for example, we are receiving the goods in installments, once we receive last installment, then only we can claim the input tax credit. So in between any installment, for example, after receiving 10,000, this is the first installment, second installment and then third installment. So in between first and second installment, we cannot claim the input tax. Only after receiving all three installment, we can claim the input tax credit. Next one, no ITC will be allowed if the depreciation has claimed on the tax component of the capital goods. If in case we are using the capital goods, we have purchased the capital goods to produce the product. In that capital goods, if we allowed or depreciation on that, once we allow depreciation, input tax rate cannot be against an invoice or received in lots or installments. The registered person shall be entitled to take credit upon receipt of the last or lot of installment. Already explained you. So if we are getting the installment, if we are receiving the goods in installment, once we get all the installments, then only we can claim the installment. Again, while we are sending the goods in installment, once we send all the goods in installment, then only we can claim the input tax credit. The payment should be made within 180 days from the date of issue of invoice. So once, for example, I am the recipient of the goods, so the A is the supplier, B is the recipient of the goods. So B has to get the input tax credit because he has paid the tax on input from B. A is supplying goods, B is receiving the input from A. He has to make the payment within 180 days. B has to make the payment within 180 days from the date of invoice. So when A will give a invoice, for example, today date, so let's assume 1st Jan 2021. So he will issue an invoice on 1st Jan 21. So within 180 days from this billing date, the B has to, after paying the amount, he can claim the input tax credit. B can claim the input tax credit. Next point, documents. What are the documents we can submit, or what are the documents are required to claim for input tax credit? First one, an invoice issued by the supplier. What are the invoice or bill? What are the documents issued by the supplier of goods? Next one, invoice issued by a recipient. Again, once the goods received by the recipient, he will again issue a document regarding the how much goods he received, what is the actual value of the goods. Next one, debit note issued by the supplier. In case any tax, excess tax is paid or lesser tax is paid, so the debit note issued by a supplier, that document has to be produced to the tax authority. Next one, a bill of entry. If we are receiving goods from other country or foreign country, a bill of entry or similar document has to be produced from the Customs Act. Next one, an ISD invoice. Input service distributor invoice. So input service distributor means he is a person who distributes the tax to his branches. For example, head office is in Bangalore. This is the head office. So we are having so many branches. Mysuru branch, Mandya branch, Hassan branch, Hubli branch. We are having so many branches. On the base of total turnover, the head office will distribute the input tax credit. What are the input tax credit received from the government? That input service credit will be distributed to all the branches. This is called as input service distributor. So that invoice has to be submitted. Next point. Who are all the persons or business who are not eligible for input service distribute or input service credit? Let's see here. So motor vehicle, except when they are supplied in course of business or used for providing the taxable service like transportation of passengers. Only the motor vehicles who are supplied or used for transportation of passengers, transportation of goods, providing training on driving and navigating such vehicles. Next one, further supply of such vehicles or convey. Apart from these purpose, if you are using the motor vehicles for the business purpose, then input service or input tax credit is available. So if you are using the motor vehicles or vehicles for any other purpose apart from business, then input tax credit is not available. Next point, supply of goods and services in relation to food and beverages, outdoor catering, beauty treatment, health service, cosmetics and plastic surgery, except where such inward supply of goods or services of a particular category is used by a registered taxable person for making an outward taxable supply of the same category of service. For example, so in these service, for example, it may be food, beverages and outward catering. These services, as a business purpose, we did these things, then input service tax is available. For example, a catering service, if they have purchased any products from the market to produce or to prepare the goods and sell in the business purpose, then input tax credit is available. If they are using for self purpose, then input service credit or input tax credit is not available. It may be beauty, it may be healthcare, cosmetics and other service purely for business purpose. So if they are using these goods or inputs for business purpose, then ITC is available. If it is using for self purpose or for example cosmetics, so it may be beauty parlor service. So they render their service their family members or friends without charging anything, then ITC is not available. If it is rendering for the business purpose, then ITC is available. Next one, membership of club, health and fitness center. These institutions or organizations comes under non-profit organizations or non-trading concern. Therefore, the ITC is not available for the input purchased from these organizations. Next point, rent a cab, life insurance, health insurance, except where it is statutory obligation of an employer to provide such services. For example, I am an employee. I'm an employee in an organization. So let's assume A is a person, is an employee in an organization or institution. So he is having A, B, C, 3 employees. This organization is providing health insurance service or rent a cab service, insurance service to its employees. He is an employer providing this service to the employees. So if it is mandatory from the government point of view, on the base of law, on the base of any government law or any local authority, state government, central government is mandatory. So if any rules applicable to provide this service to the employees, then it is input service. What are the expenses made by the employer to provide this service to the employees? In case of any mandatory law is available or applicable under the government of India, government or state government or central government or local authority, then ITC is available for the expenses incurred by the organization or institution. If it is not, if there is no any rules, regulations, law by the government to provide these things to the or this facility to the employees, if in case the employer is giving or providing these services without any rules, regulations on their by own intention, then ITC is not available. Next point, travel benefits extended to employees on vacation such as leave or home travel concession. Again, so if the travel benefits provided by the employer to employees without any rules, regulations or mandatory rules, if the travel benefits, any other benefits or so paid leave available to the employees, if that is also for that expense also input tax credit is not available. Goods and service, goods or services received by a principal means owner in the construction of immovable property. So if a owner received these goods and services to construct the building, then if you for the improvement of the building or improvement of the business, then ITC is not available apart from plant and machineries. If they purchase plant and machinery to produce the product, ITC is available. But if they use these goods and services, construction materials to improve the building for further construction, if they improve or if they utilize these things, then ITC is not available. So it is an input service for supply of works contract service. Next point, goods and services received by a taxable person for a construction of an immovable property on his own account other than plant and machinery, even when used in the furtherance of business. So apart from plant and machinery, so if they are using these inputs for the construction of building, furtherance of business or improvement of the business, even though it is used for business purpose, so those inputs will not be given credit for the inputs. Only apart from plant and machinery, if they purchase to produce the product, then ITC is available for plant and machinery. But if they are using the inputs, for example, construction materials, iron, cement, they are using for the improvement of the building or further construction of the building, ITC is not available for those things. Next point, goods and services on which tax has been paid under the compensation scheme. So if they use goods or if they doing the or if they registered under the composition scheme, in this case they are used any inputs for the production of the product, then also input service not is available. Next point, tax paid after the detections of fraud, willful misstatements or suppression of any information. So for example, I have to pay the tax to the government 50,000 rupees. I have to pay the tax, actual tax, but I show it is as a 30,000. So by misrepresentation or any fraudulent activity, I show this tax only 30,000 rupees. So on this again I will get the input tax to the extent of 20,000 rupees. 10,000 rupees I have paid the tax. 10,000 rupees. Later government or the tax authority get to know that I have misrepresented the information or manipulated the information actually provided to the tax authority. In this case also input tax credit cannot be available. I have to pay the full 50,000 rupees tax. Next point, tax paid for release of detained or seized goods. So if I paid tax for detained or seized goods from the government, then also ITC is not available. Tax paid for release of confiscated goods, again same, confiscated goods means if the goods has been confiscated by the government, in this case also ITC is not available. Next point, goods or services are both received by a non-resident taxable person. So if I am sending the goods to non-resident taxable person, in this case also this person, the non-resident taxable person, cannot be get the input tax credit. Next one, goods or services are both used for personal consumption. Only for business consumption we have to use the goods. If you use the goods for personal consumption, in that case ITC is not available. Next one, goods lost, stolen, destroyed, written off or disposed by way of gift or free samples, only for business purpose. So in case of goods lost, for that expenses we cannot give the ITC. Goods stolen, for that also we cannot give the ITC. It may be destroyed or written off or distributed as a free sample or gift. In that case also ITC is not available. Next point. Now let's go to the problem. So mention the credit available on X Limited in respect of the following items: produced in the month of February 2020. So goods supplied for the captive consumption in the factory. So this is available, ITC is available for 1,20,000. So here ITC is available. Next point, input used for quality control test. This is for business purpose, ITC is available. So inputs used for trial run. Yes, this is for business purpose, ITC is available. Next one, goods, food and beverages produced from a registered person to used in a director's meeting. This is not business purpose, so ITC is not available. So even though there is no obligation from the side of government to use or to provide the food and beverages to provide the directors in the meeting. So this is not for business purpose, this is for personal purpose or for the purpose of personal gain that are doing these things. So ITC is not available. Next one, packing materials used in a factory, ITC is available. Next point, goods purchased but were later stolen, ITC is not available. Stolen goods destroyed, here we have discussed. Stolen goods destroyed, written off, for these things ITC is not available. Next point, goods used for setting up a telecommunication tower being immovable property. See, any immovable property. So if we are used apart from plant and machinery, keep this in mind. Apart from plant and machinery, if any goods or service or inputs are used for construction of immovable property, ITC is not available. Next point, goods used for construction additional floor. Again, additional floor apart from plant and machinery, if we are doing or furtherance of business or construction of any other plants or any other building in the business, for that if you used inputs or any materials, raw materials to produce or to construct the building, there also ITC is not available. Next point, goods used for repairing on the office building, for repairing and all, ITC is available. ITC input credit is available. Next point, goods purchased for being used in repairing and same has been capitalized. So if it is capitalized, again ITC is not available. So now add all the items. Now actual ITC is available is 4,13,000 rupees is the actual ITC is available for that particular business. Let's go to the next problem. From the following information of Nupur Company, Bangalore, for the month of December 2018, compute the eligible input tax credit and GST payable. So first point, purchase of raw materials A from supplier of MYSURU for 3 lakh rupees at 5%. See, where we are purchasing the product from MYSURU. So where is our company registered? Bangalore. So what ITC or input service distribution or GST rules says? So when we purchase the goods from within the state, so Bangalore means where it is registered in Karnataka, it is registered. So it is Karnataka registered means we are supplying the goods or we are purchasing the goods within the states. When we purchase the goods or supply the goods within the states, whatever the tax we pay, 5% tax we are paying here. So this has to be divided between state and central, that is CGST and SGST. So let's calculate 3 lakh into 5%. So let's calculate this. 3 lakh into 5%. It is 15,000 tax we have paid on input. 15,000 tax we have paid on input. So out of 15,000, 50% should go to state government. Remaining 50% should go to central government as CGST and SGST. So what are the amount distributed? 7,500 goes to state government as SGST. Remaining 7,500 should go for central government CGST. I hope you are understanding. Again, coming to the purchase of raw materials of B from Mumbai for 15 lakh rupees, the tax rate is 6%. So what is our total input? 15 lakh. So on 15 lakh, how much tax we have paid? 6%. So let's calculate first. So 15 lakh into 6%, it is 90,000 we are paying tax. But here, what is the point we have to, now remember here, so this is within the state. So from Mysuru to Bangalore goods are transporting. Here from Mumbai to Mysuru or Mumbai is a different state, Karnataka is a different state. So our registered place is Karnataka. We are purchasing goods from Mumbai, that is out of the state. So when the goods are transported or supplied out of the state, it comes under IGST. It comes under IGST. So the full amount will goes to central government as IGST, integrated GST. IGST. So this tax has to be divided between states as CGST and SGST, because within the state it is also called as intra-state. So when the goods supplied out of the state, that is called as IGST, interstate. So intra-state, interstate. Next point, sale. These 2 points are inputs. This is the output. See, this is called as, these two, purchase is called as input. So input, we have paid the input tax. On output, we have to pay the output tax. So sale of 5 lakh rupees worth of goods to Hubli. So where is Hubli? Hubli is within the Karnataka. Then it comes under CGST and SGST. Hubli is, so whatever the tax we are paying, 18% tax. Let's calculate 5 lakh into 18%. So it is 90,000. 5 lakh into 18%. So how much tax we have to pay? 90,000 we have to pay the tax. So since we are purchasing goods from Hubli, so it is distributed as CGST and SGST. 90,000 means how much tax we have to pay? So it is, so 45,000. So 45,000 we have to pay as CGST. For remaining 45,000 we have to pay as SGST. Now, supply of goods worth of 4 lakh to Mangalore. Again, where is Mangalore? It is within the state. Again, what are the tax we pay? 12% means 6% CGST, 6% SGST, 50% CGST, 50% SGST. Out of, calculate the 4 lakh rupees. Out of 4 lakh, what is the rate of tax? It is 4 lakh into 12%. So it is 48,000. 4 lakh into 12%. It is 48,000. Out of 48,000, 6% is CGST, 6% is SGST. No? So it is divided by 2. So 48,000 divided by 2 equals to 24,000. So 24,000 is CGST, remaining 24,000 is SGST. Now let's go for solution. Computation of input tax credit eligible on input. So already whatever the input, while purchasing we have paid the input tax, while selling we have to pay the output tax. While selling or while paying the output tax, we should deduct the input tax, whatever the tax we have paid. While purchasing the product, that tax has to be deducted, remaining tax has to be paid to the government. Now let's calculate purchase from Mysuru. It is intra-state. Intra-state means what? Within the state. So where is our head office? Bangalore. So where is our business? Business is in Bangalore. We are purchasing from Mysuru. Then it is intra-state supply. So intra-state means CGST, SGST. So what is the total rate of tax? 5%. So if it is divided between state and center, so 2.5% CGST, 2.5% SGST here. That's what 3 lakh into 2.5%, 7,000 SGST, and CGST again to 3 lakh rupees into 2.5%. It is 7,500. So IGST nil. Again come to purchase from Mumbai. So where is Mumbai? It is out of the state. So our business is in Karnataka. It is within the Karnataka. So we are purchasing from other state. It is intra-state. So from Mumbai to Karnataka. So whatever the tax, it is other state or other country. If we are selling or purchasing goods from other country or selling or purchasing goods from other state apart from Karnataka, then it is called as interstate, between two states. Then whatever the tax should be payable to the central government as IGST. It does not comes under CGST and SGST. Now let's calculate what is our purchase. 15 lakh into 6%. Full 6% should goes to IGST as a integrated GST. Next point, computation of output tax payable. So this is the input tax. Let's add on CGST how much tax credit is available. to the extent of 7,500. Under CGST again we are having tax credit available under SGST is 7,500 and we are having tax credit under IGST it is 90,000. We can reduce while paying the output tax, we can deduct the input tax whatever already we have paid. This is the tax already we have paid. So now after production of products we have to pay the tax, output tax on the products. On that output we have to deduct the input tax, remaining tax payable to the central government or state government. Again let's calculate the output tax. Now on the sale we have to calculate the output tax. On the purchase we already calculated the input tax. So now here sale into 5 lakh into 18%. So sale from where? Hubli. Hubli means within Karnataka. Again we have to divide CGST, SGST. Let's calculate here. See what is our sale 5 lakh. So 5 lakh into 9%. So 9% means 50% of the 9% is CGST, remaining 50% is SGST. So 5 lakh into 9%. Total it is 90,000. If you calculate half of this, let's calculate like this also. 5 lakh. So what is the half of 9%? It is 4.5%. 4.5%. It is 45,000. Again, it is CGST. So this is CGST. Again, 45,000, remaining 45,000 equals to SGST. If you add both of that, you will get 90,000. Again, so from Hubli, 45,000, 45,000 IGST nil. Again, from Mangalore, so where we are purchasing, where we are selling the goods to Mangalore, we are selling the goods. Again, where is Mangalore? It is within the state. Then it is, we have to pay CGST and SGST we have to pay. So on 4 lakh, 6% means what? 3% is CGST, 3% is SGST. So 24,000, 24,000. So if we add it, how much tax we have to pay? CGST we have to pay 69,000, SGST we have to pay 69,000. There is no sale out of the Karnataka. So apart from Karnataka, so both the sales is within Karnataka. We have not sold any product. It is out of the Karnataka or out of the country. So IGST is nil. IGST is nil. Now there is a mechanism to set off and carry forward. There is a mechanism to set off and carry forward. This is called a set off and process of set off and carry forward. What is set off? So while paying the CGST, already I have paid the tax to the extent of 7,500. So this amount will be deducted. Remaining tax is payable. This process is called as set off. Okay. Again here also already I have paid to the extent of 7,500. So now how much tax payable under SGST? 69,000. Deduct the tax paid on the SGST 7,500. So 69,000 minus 7,500. Remaining tax is payable to the government. Now let's calculate again. On IGST, what are the excess amount or what are the excess tax I have paid or excess ITC available under IGST? We can utilize for the CGST and SGST. Let's see that mechanism here. Now this is set off and carry forward mechanism. So first one, total output tax. What is the total output tax? It is 69,000. 69,000. So 69,000, 69,000. This is nil. So we don't have any output tax here. See here, we don't have any output tax. So 69,000, 69,000. Again, less input credit available. So what is the input credits available? Here it is 7,500, 7,500, 90,000. Let's deduct this. Let's deduct this. 7,500, 7,500, 90,000. So 69,000 minus 7,500 equals to 61,500. Here also 69,000 minus 7,500 equals to 69,000. So here we don't have any amount. This is minus 90,000. This is minus 90,000. Again, so still how much tax we have to pay? 61,500 here. SGST 61,500. CGST 61,500. So this is excess amount. Still we have excess amount. Now we have a tax mechanism. So any excess IGST is available. We can utilize. First utilize for the IGST. Later you can go for CGST. Still we have excess amount. We can go for SGST. I will write here. So CGST, SGST, IGST. So now how to calculate the excess credit or how to set off the excess credit here. So first, any credit available under CGST, first utilize for CGST. So first one, any credit available under CGST utilize for CGST only. Okay. Later we can go for IGST. Any excess credit available, for example, so CGST we have to pay tax 10,000. Now credit available under CGST is 20,000. First utilize this for CGST 10,000. Credit available is 20,000. Okay, so this 20,000 first utilize for deducting this 10,000. If you have any excess amount, still we have how much excess amount? 10,000 rupees still we have. That amount can be utilized for the IGST. Remaining 10,000 rupees we can go for IGST. Again, come to the SGST. We can go for here IGST. So excess amount first utilize for CGST, then go for IGST. Second one. Here also CGST, any credit available for under the SGST, utilize for SGST first, then go for IGST. Okay, next one. Here in IGST, any excess credit available, first utilize for IGST only, then go for CGST. So we can utilize excess amount available under IGST, we can utilize for CGST. First CGST, this is first one, this is second one. If you have still excess GST or credit is available, we can utilize for SGST. Are understanding? See, first any excess amount under CGST, utilize for CGST, then go for IGST. So if you have any tax credit under SGST, first utilize for SGST, go for IGST. If you any having tax credit under IGST, first utilize for IGST, then you should come to CGST, then you should come to SGST. So first we can go, yes sir, can we go for SGST and come to CGST? No, it is not applicable. And also cross utilization is not between CGST and SGST, we cannot utilize as a cross utilization. So any excess credit available we cannot use for SGST. Any excess credit available under the SGST we can utilize for CGST. There is no cross utilization between CGST to SGST, SGST to CGST. So but we can IGST we can utilize for first for IGST, then go for CGST, then go for SGST. Here now see here. So still how much tax payable here? After deducting here 7,500 rupees, still we have to pay 61,500. Here we are having 90,000 to the extent of 90,000 tax credit. So this amount first here utilize here. So here first IGST credit available, go for IGST. We have gone for IGST. So we don't have any tax payable under IGST. So full 90,000 rupees available. So we can utilize for first CGST and SGST. So come here, out of 90,000, how much tax payable? 61,500 rupees. First utilize that, it will become 0. So 67,500. Remaining is 90,000 minus 61,500. 90,000 minus 61,500. So 90,000 minus 61,500 equals to 28,500. So any amount available after deducting CGST, then we can go for SGST. Still in SGST also we have to pay 61,500. So out of actual tax payable is 69,000. We have utilized to the extent of 7,500. Remaining is 61,500. So excess IGST is available. Still we have 28,500. This amount we can deduct here. Remaining tax payable is 33,000. If you have 1 lakh rupees, for example, 1 lakh rupees IGST, so you would have got the tax credit to the extent of 38,500. Okay. If you have 1,10,000, would have got tax credit for here under CGST it is 18,500. Like that we can deduct. So remaining amount is paid. Now we have utilized IGST, excess IGST for first for CGST, later for SGST. Remaining tax is payable. Now let's go to the next problem. Input service distributor. Input service distributor means it is a head office. Input service distributor is a head office. So here other branches, Chennai branch, Bangalore branch, Delhi branch and Bhopal branch, on the base of turnover, whatever the input service or input tax credit available from the tax authority, that credit this head office has to distribute to the all other branch offices. On the base of turnover, we have to distribute the ITC for all branches. That's why this head office is called as input service distributor. Here, Paras Limited has its head office in Mumbai, registered under Input Service Distributor with 4 branches office in Chennai, Bangalore and Delhi and Bhopal. It seeks an advertising agency at Mumbai for advertising its products. The total invoice value is 6 lakh rupees. The invoice value, the GST is available is 6 lakh rupees. The total turnover of the head office and the branches during the quarter ending on 31st December 2020 were as follows. It is, what is our turnover? 5 lakh, 6 lakh, 3 lakh, 8 lakh and 3 lakh. So on the base of this, we shall have to distribute this credit to all the branches. Now let's calculate. Total invoice value is 6 lakh rupees. So including GST will be distributed to all the branches, since the ad service is available by the branches also in proportion to their turnover. What is their turnover? Add all the turnover. 5 lakh plus 6 lakh plus 3 lakh plus 8 lakh plus 3 lakh. So we'll get 25 lakh. We'll get the 25 lakh. 25 lakh. Now on the base of this, we have to calculate this 6 lakh rupees has to distribute to all the branches. So Mumbai 5 lakh divided by 25 lakh. So what is our turnover in Mumbai? 5 lakh. 5 lakh. What is the total turnover? 25 lakh. So 5 lakh divided by 25 lakh into what is the total ITC available? ITC available is 6 lakh. So into 6 lakh. So how much ITC go to head office? It is 1,20,000. Now come to Chennai. Again, what is our turnover? 6 lakh. So 6 lakh into total turnover 25 lakh into 6 lakh is the ITC. So what is the ITC available to Chennai branch? 1,44,000. Come to Bangalore. Again, 3 lakh divided by 25 lakh into 6 lakh, 72,002 is the credit available. Again, for Delhi, 8 lakh minus 25 lakh into 6 lakh is 1,92,000 is the credit available to Delhi. Again, Bhopal divided by. So 8 lakh divided by 25 lakh into 6 lakh. The total credit available for Bhopal branch is 72,000. So out of 6 lakh, if you add all these things, you should get 6 lakh only. Out of 6 lakh credit available, so we have distributed the credit available from the input tax authority. The input service distributor is distributing the credit for all the branches on the base of turnover. So distribution. So again, what is the distribution? 1,20,000. So for 5 lakh, distributed is 1,20,000. For 6 lakh, distribution is 1,44,000. For 3 lakh, 72,000. For 8 lakh, 1,92,000. For 3 lakh, 72,000. Now let's go to the one more new topic is registration. So what are the important points under registration we will discuss here. So these are the, on the exam point of view, these are the very important points. The following are not required to furnish the return. So who are the person who are not required to return? First one, so you will be asked this question for 5 marks. So non-resident taxable person need not to require to returns to or need not to provide any details to the tax authority. Next point, person under compulsion scheme need not to returns, need not to produce or furnish the return to the tax authority. Next point, person deducting tax at source, TDS person. For example, salarized person is the person who gets his salary deducted or tax deducted and tax at source. So he is also no need to file a return. Next point, person collecting the tax, TCS. It is a e-commerce business, will collect the tax while selling the product. They will directly collect the tax from the customers. They also need not to file a return under GST. Next one, a supplier of online information and database access or retrieval services need not to pay this. If you write 5 points, you will get 5 marks. These points will be asked for 5 marks in the exam. Next point, contents of GSTR 1. So you will be having 10 marks question or 15 marks question. What are the contents of GSTR 1, GSTR 2, GSTR 3? These are very important question. Any one question you will be having in the exam, either GST 1 or 2 or 3. So what are the contents of GSTR 1? So these are the contents. We have 1, 2, 3, 4, 7 here, again 12, So 13 points we are having. So this question will be asked for 10 marks. So write each points will be carrying 1 mark. So if you write each point will be having 1 marks. Total marks we can expect from this is 10 marks. Again, contents of GSTR2, again same, GST number, year, tax period, legal name and HSN summary. Next one, input service distributor credit, TDS, tax deduction at source credit and tax collection at source credit. Next one, advance payment. Next one, ITC claims or reverse charge. Next one, addition or reduction of output tax or business to business supply under the forward charge, supply under reserve charge mechanism, import of inputs and capital goods, debit or credit notes, supply from the composition person and nil rated or exempted or non-GST supplies and amendments for the period. In that particular period, any amendments is there from the government that has to be mentioned under the GST registration 2. Next point, these are the contents of GSTR 3. Under GSTR 3, we have two parts, part A and part B. So we can expect this question for 15 marks. What are the contents of GSTR 3? Or mention the contents of GSTR 3. You can expect this question for 15 marks. So this all information we have provided in the notes. So please read that for 15 marks. So we have here up to here part A. From here we can get the part B. Next one, steps in filing the return. This is for 5 marks. Steps in filing return is 5 marks. Filing GSTR 1. Next GSTR 2A auto populated. Next one, finalizing the filing GSTR 2. Next one, reconciliation of outward and inward supply. Next one, finalization of GSTR 3, payment of tax and submission of GSTR 3. These are the 5 points or 6 points. We can expect this point for this question for 5 marks. So thank you. Again, we'll meet in the next session. Till then, thank you so much.